There we go. What's up, everybody? I realized I had to start giving OBS a few moments to warm up and start the connection. Normally, when I first start talking, I've learned that it's essentially just to myself and to Thor, but Thor is sleeping right now, so I don't know if he cares. First things first, cheers and bottom up. We got to take some drugs. Had some physical therapy today. That overall went well. We are on the glide slope to healing, hopefully. And man, we have an agenda for today. So first, let me grab the chat. And I want to say hello to everybody that we have hanging out. As always, whatever you want to cover, it's a completely open-ended session. So we can dive into whatever your heart's desire. I'm actually going to turn the air up a little bit in my office, cool it off. And it looks like we have Lance, Elong Songs, Joey Reese, Mr. Off Putin, Paulo. We have the one and only Roaring Titty, which is awesome. Perfect. We have the gang in the house. So the session for today is, again, kind of varied. We have to talk about the Fed decision and the rate picture a little bit. And this is specifically because it has a tremendous impact on the market and the perceptions of things. So I want to cover that. I also want to take a look at a question that I got from Bruce via email, and they're asking if we could take a look at GME. I guess there's some January calls that they're interested in exploring. So I will take a look at that. And then the other thing is I wanted to start a conversation about kind of like meme stock trading. We'll see what we can get to with that. Meme stock trading with options. I actually just recorded a video about it yesterday, but it won't be out for a few weeks. So I need to understand a little bit more the current state, and then that'll help me craft a little bit of a more personalized approach. Because I think with trading meme stocks with options, it's obviously entirely doable, but there's a lot of specific rules that I think have to be obeyed in order to not just lose all your money. So that's the goal. And we have, who else we got? That Lauren says you would be proud. I went with a plan and stuck to it, made about 600% in options. That's awesome. Killer job. Very, very good. The biggest part that I care about with that is making a plan and sticking to it. And that is eventually long-term what will serve us very well. The ability to follow a plan when things are going well tends to be easier. And the time where it starts to become pretty challenging is actually a little bit after the fact. So yeah, I think it's absolutely awesome that you're doing well and that you had a solid plan and a solid trade today. This is actually looking a little interesting to me here. So yeah, let's talk about this Fed statement thing. I ended up placing a bunch of different trades today. I'm not going to spend a lot of time reviewing that stuff. I'll talk a little bit more about that tomorrow on that live stream. But the move here has been really interesting. And even the move that we're seeing now after hours, I find the overall stock market performance here slightly perplexing, if I'm being completely honest. Because if we take a look at example, the Russell, and let's take a look at, let's do today 5 minutes. So this is obviously showing us after hours, but it's starting to run pretty heavy after hours. And then if I show you what it did today, this is very interesting to me. So we start getting the news on the Fed and the rate picture changing. Great. Love that for everybody. Then the stock futures start selling off heavy, essentially getting to where we were before the cut was announced. This movement surprised me actually quite a lot. The reason why it surprised me is because I expected this, and I put on a bunch of different trades for this. Then I was capturing profits via running stops. But the part that I don't fully understand is why it did a full retracement. And then now after hours, again, it's running up almost 1%. That's kind of fascinating to me because that is literally the definition of information indiscreetness. And I actually like the Russell right now quite a lot, but I scaled out of my position running stops in there. So I'm actually looking at this. I'm not even gonna lie to you. I might put on a trade. Rowan Titty says algos pump and dumping. I don't think it's that. I know for especially like the apes, you guys are kind of like baked in the bullshit and typically would lean on that. The problem with futures markets is that they're literally too big. So the ability for algos to pump and dump futures is kind of crazy. Not saying crazy as an idea. It obviously is a completely fair formulated idea, but the crazy part is the ability to do it because there's so much capital in futures markets that it would take a really, really wild collusion in order to do that. But there's a good chance actually sometime during this, I'm going to take a pause and go to voice only so that I can throw a trade on because I kind of like this. I would throw it on with you guys live, but it shows my account details, which I don't want on a live stream. Let's take a look. Because I don't think that this move is done. I was surprised that it came down as much as it did. I got stopped out. But so to get everybody up to speed with the trade that I had on, at least while I had it on, I started getting into Russell futures here, and I've essentially scaled in heavily each day. And then today, right before we started launching, as soon as I saw that candle opening up at 1100 Pacific time is when the position got built out pretty heavily, like really, really heavily actually as a relative size to the portfolio. So the notional exposure was massively leveraged, but I viewed it as a pretty low risk trade. Now, mostly because I was in deep profit and able to follow it. But man, I'm sorry, I'm kind of distracted because the movement here is just so interesting to me. What is happening? Vladimir says they dump natural gas futures constantly. Well, again, you have to be careful with that, right? Like, what does who are they, and what does dump mean? Because if you're talking about people trading and speculating in things, then sure, people trade and speculate in nat gas futures all the time. And nat gas futures as a commodity are highly, highly volatile. That's super normal. So I'm not sure, like, oops, wrong one. I'm not sure what we mean. They equals algos. Yeah, I would love to see proof. Like, I know people will say that, but I would love to see proof that that's actually happening. And again, I'm not saying it's not happening. I'm not suggesting that there's no impact of algos. I'm not saying that at all. But what I'm saying is I think it's a lazy descriptor to just say algos are doing blank. It's not just algos. Like algos, as you guys refer to them in this context, are typically looking for mispricings and arbitrage. They're not starting to drive price overall. The people that are driving price are the people who choose what to make and what to tell the algos to do or what to tell something to do in relation to the portfolio. So most of the time when we refer to like algos, they're most of the time scavengers, just looking for small mispricings to arb them back into play. I come across them, I compete against them terribly because they're so much faster than I am. But every once in a while, I'll find something that I think is priced slightly off and I'll go to trade it. And 99% of the time, by the time I can even analyze it and start to put something on, it's gone. So yeah, I don't think that Vladimir says from chat a couple minutes ago about algos dumping. Yeah, then in that context, I don't think that's algos at all. Like, I don't think it's a fair or logical conclusion to arrive at to definitively say it's discretely algos. Part of it, absolutely. They're always going to be part of the game. They're going to play the price action as it moves. But it's kind of like the same thing when people think that market makers are like controlling and driving price, all these different places. Again, like the majority of instances, market makers don't have that ability. It's literally not available to them. So now Roaring Titty just came out with exactly what we know what it is that it's Nancy Pelosi. There's no chance that it's not Nancy Pelosi. So I think we can all agree. And it's like, it's easy for me to blame Nancy Pelosi or Robin Hood. I'm sure Robin Hood is in collusion here somewhere too, those bastards. So yeah, I think I can always get off. Like, I bet you Robin Hood is causing all of the problems we see, whatever those problems are in Nat Gas. I blame Robin Hood. Those pieces of shit. Offpoon says, I've seen the entire futures chain go from green to red or vice versa when storage report is released in winter. Yeah, of course. That's like markets move, man. So the fact that you see markets move isn't evidence of anything. That's simply evidence that markets move. So yeah, that's super, super normal. But yeah, anyways, back to, sorry, I kind of want to keep an eye on the Russell here because I really do kind of like this after hours. I might just put on a small trade in it so I can just chill the fuck out and focus on something else. Yeah, I'll still be here. I'm just going to go to voice only. You guys should still be able to hear me. But I need to turn into my actual account and I'm going to put on a trade really quick. So all I'm doing is looking in the Russell and I'm going to go in futures out to the D's. And again, I'm going to put on a really small relative trade, but I just kind of like how it's setting up after hours here. And then we'll see how it goes. So let's drop these off. And the kids are off. And the last thing I need to do really fast is just figure out 2247. So right now I see some kind of near-term support, probably at like 2233, something like that. So I'm just confirming what my risk is there. Is not enough. So I actually need to add a little bit more. So we'll add a few more pieces to the puzzle. There's the second fill. B. Williams says you should probably take down the screen of your account. It's literally a fantastic joke. I love that. And okay, so now we have about exactly what I'm looking for. So I'm going to set risk here at like 2210 or so. Yeah, we'll probably take it to like 2203. So that's where risk will be managed. That's like the correct size trade now. So here I'm going to rest stop closing order right where kind of below where I want. So we'll do like 2203.5 or something like that. We'll leave it set, good to canceled, rest that order, and then we will come right back. It's trying to rest the order. It's just moving abysmally slow. Okay, cool. So that order's on and yeah, we're good. So let me clear out of this account now, go back to my pass-through account, and then we will be back together. Okay, cool. Thank you for bearing with me for a few moments. We are back in action. So yeah, anyways, it's just because seeing after hours movement like this, it kind of makes me interested to see how it runs tomorrow. I already started talking about this a little bit in the Discord, but I made a really solid return today. So I can speculate a little bit more as I want, which is the idea, because again, I don't actually think that this move is done yet, but I think the reversion that we saw today took me for a pause, which is why I let myself get stopped out. But now seeing this after hours move makes me a little more curious, and we'll see how it goes. Obviously, as soon as I buy it, it's going to crater into the earth, as it should, because that's just the way that markets go. But I gave it plenty of room. So essentially what I'm going to do is let those run. And then you can see I'm not at the 21.95 handle. I'm actually up here is essentially if we drop below there, I want to get out of here. So yeah. All right. So let me catch up with the chat. Carlos says, looking forward to the downfall of America. I'm sick of Americans' entitlement. Carlos, unfortunately, if that's the angle, we're not going to have a spot for you in the stream. You cannot like stuff like that, but I don't really play that game. So Nick says, weren't they all sells? Oh, I think you're talking about the GME options. Yeah, we could take a look. Let's take a look. And then B. Williams says, I think markets will go up initially in the AM, then by midday hit some new lows. It's hard to tell. It's really hard to tell because here's what I will say is I don't know anybody who had this in their bingo card. Anybody. This move followed by this move followed by the after hours open move. Like I don't know anybody who had that in their bingo cards. I think general consensus was an up move following the actual rate cut, especially because it came in at 50 basis points. I think that coming in pretty heavy. No surprise there. But I think the thing that nobody probably had in their bingo cards was this crash to previous cut levels. And then now this post cut after hours open rally. So yeah, this part is really interesting to me. So let's take a look at some stuff, shall we? I don't actually know how I highlighted all that. And okay, so this, I got an email from MS that I thought was kind of interesting. And I see equity markets may expect an economic. So the article that they sent was really interesting, I thought. And it's essentially talking about the differing views on rate cuts. But when I look at the rate cuts here, I personally, and I already covered this in my video earlier today, so I'm not going to dive super far into detail. Essentially, I was just summarizing my take of the overall, rate cut scenario. And when I look at this, I see a few things. But primarily, it's that I don't actually view this as excessively bullish, like at all. So when I look at the movement that we saw here, we had going back to this. This I typically like, no, I want this. So you can see, like when I look at the probabilities of these two different cuts and the way that it essentially behaved coming into August, let me go to this one here. My bad. None. I want these two. This was really, really interesting to me. And what I'm showing you, this is looking at the historic probabilities of different moves. So this shows us obviously, at the 5.5 to 5.25. And then let's throw this one on here as well. So what we can see is that the probability of this cut changing, it morphed massively. So we can see here that staying at 5.25 to 5.5 was in vogue up to 50% not that long ago. Then that cratered off. Okay, fine. And then this is what I find most compelling, that we see a spike at 500 to 525. And then as we get closer and closer, literally over the last week, take a look at this. September 11th was 86% chance of 5 to 5.25. Then you go to the 12th, now it's 72. Go to the 13th, now it's 50. Go to the 17th, now it's 36. That's a massive change in a non-massive time frame. So when I look at this, that tells me the market got pretty significant new information that started leading to bond repricing pretty aggressively. That led to this relative recent change in the probability of a cut. That's exactly what I see here. So exactly to that Lauren's question, I do think the market is in trouble. I do. Do I think that it's going to crash? Not necessarily, but I do think it's in trouble. And the reason why I think it's in trouble is because if we had stayed the course running this 25 basis point cut, where if we go back literally to July, that was over 90% probability. It was up to 95% probability, 96% probability out here in July. And that cratered here, rebounded massively, then cratered again. So this is the market clearly trying to synthesize economic data as it's coming out and then trying to understand the future implications of the data. But I don't think that a 50 basis point cut today is super bullish. I think that 50 basis point cut today is still not a lot. I also think it happened a little bit late, but my general opinion is that there's a really, really, really good chance that the market is going to struggle, because if we think about the Fed rate cut, the compounding factor here is the fact that when we go through this cut cycle, it's not an immediate reprieve. That's not what we're going to experience here. So essentially, as we think about the market now, what's going to happen is it's going to take 18 months to see the effects of these cascading on top of one another and what that's going to lead us to. So that's why I continue to try to remind people from a trading perspective to be really thoughtful about the risk we have on right now. Trade the move, right? Like I literally, towards the beginning of this live stream, I took the time, and thank you for being good sports about it, but I took the time to put on more of a position because I'll still trade the short-term move without a doubt. But I think the long-term implications are not so dovey. So right now, the way I'm trading it is still long, essentially all futures. I have all the major indices, but I also am really hesitant to kind of dig into positions. I have some other core positions that I typically like to run that I don't have on right now, and I'm not going to have on for a little while. Corvegas says 75 bips would have spooked the market. Oh, yeah. If it was 75 basis points, that would have meant that shit is already going bad and it's way too late. That is like a crash cut. So yeah, 75, I even think 50 basis points is not that far of a cry from that either in terms of the perception. I don't think most of the market is like, oh yeah, this is great. This is exactly what we needed. I don't see that. So let's take a look here. So I wanted to read, I didn't read this through yet from Morgan Stanley, and I want to see what they say. So when is this from? The 18th. So yeah, they just sent this email out. Don't care. Inverted yield curve show near-term maturity dates, higher yields, longer term. Investors may be aware of recession. Yes. Economy track for soft landings, which I'm just so curious about that. Or the Fed has kept rates too high for too long. Morgan Stanley's committee. Let's see. I'm going to pass through the audio. Let me know if you guys are able to hear this or if it's not easy to hear.
16th, and I'm recording this from my home in Ridgefield, Connecticut, of an all-time high. Underpinning the rally, current pricing suggests that stocks and bonds cannot both be right. And even as we maintain our soft landing base case, we still take seriously the warnings implicit in Treasury market dynamics as negative subsidiary periods. Notably, this narrative around weakening global growth is closely tied to worse than expected data coming out of China, the country, from small business surveys. Remember, small businesses are an...
Sorry, I wanted to listen to that, but that is like fucking painful. I don't understand why this is. Some people ask like, why don't I work for like Morgan, like as a trader for one of these institutions? One, because I'm probably way too dumb, but two, because like in that, I think I listened to that for 35 seconds. I wanted to fall the fuck asleep. So yeah, that was, God damn it. Didn't like that. So I would rather just read the words because I can read this much faster than that lady is talking. Yep. So this is talking about the global economy. Makes sense. The impact on China makes sense. And like the interdependency, I get that. This I think is actually a pretty big factor here, that from small business surveys, because we've already seen small businesses remaining suppressed for some period of time. So I'd rather be seen says, I think the Fed is just playing politics. I'm sure that that's part of it. I absolutely feel like that's part of it. Yeah. B. Williams retracted their message, which I don't like, because I was just about to read that, B. Williams. Damn it. Nick says, this seems like the most obvious recession, but it already feels like a recession in the real world of business. Consumers can't afford anything. That's the problem, though, is that right now consumer spending is still up. So I actually don't think that that's what you're seeing. I'll grab the report, but people are absolutely spending. Now, if you paid attention or if you caught the live stream that I did earlier today with my buddy Dave Lauer, you'll notice, though, that there were some back and forths based on the strength of the consumer, because he also sees strong consumer, and I understand why. But the problem with strong consumer is it's relative, right? So if we take a look at consumer spending, they're spending, and it's growing month over month. So the consumer has actually been wildly resistant and robust. It's actually like shocking to me. So for those that don't know, this is a back out so you can grab this. Here's the link to this. Nick says, not frivolous spending, but yes, we're all still spending. Well, that's the thing, right? Is like we capture spending by different buckets so that we understand what things are being spent. That's why we look at things like PCE and other analysis of where spending is being diverted. Discretionary spending is a really big thing, which I typically look at stuff like this on. Again, you can build your own little Fred dashboard and see what spending looks like, but you can see that, like, in general, people are spending. And my guess is, as we get closer and closer to more of these rate cuts coming out, I actually would guess that there's a really solid chance that as car rates come down and stuff like that, because I didn't know this, I found this out on the live stream early today. But on the live stream earlier today, Dave was telling me that like auto loans right now are like 8.5%. Like, what? I had no idea that people would take a loan at 8.5% to buy a car. Like, that's fucking insane to me. But yeah, I mean, just absolutely wild. But yeah, I'm seeing if there's a good plot of discretionary. Here we go. So this is a view of discretionary spending. And if we take a look, let's look over like the last year. Yeah. So it's definitely trending up on the year. The consumer picture has been way more resilient than I thought. And then there's another thing I want to show you. Where is it? Here. That I find actually really important to note is if we take a look at the way that we're spending, it doesn't look great. Because if you take a look at this over here, we can see delinquency rate on credit cards is continuing to grow. We can see charge-off rate on consumer loans. So this is when banks are essentially saying, yeah, we can't get this money back from the people because they don't have it. That's coming up. We're seeing business loan defaults coming up. And we're actually seeing single family mortgage delinquencies starting to trend up. It's about a neutral slope now after it contracted from here. So this is starting to level off. Now, this is going to come to a level at some point. So this isn't inherently bearish to me, but it's also, if it stabilizes, then I view that as a completely fine metric. If it doesn't stabilize, then it tells me we might have a consumer problem. So yeah. Off-Putin says, my dad told me that he once paid $1,000 to lock in a 1.25% on a mortgage loan. It depends on the loan, right? Like if that's for a personal residence, that's really high, but that's also not crazy, to be honest. Like if we look at mortgages have been 6 to 10%. Like that's actually not absolutely crazy. I think of it for a primary residence, it gives you a really long term, and then you have a lot of choices about how you want to pay the mortgage and manipulate it. With an auto, it's like a decaying asset that you have. Well, not decaying, more depreciating is the correct term in this context. Decaying really applies more to options in that sense. But I think that the impact to a consumer, if they're taking a loan out on something that's quite a lot to upkeep at that high of a rate, is a little bit different than a mortgage. But I agree with you still, like even 11% on a mortgage is still very high. There's no debate about that. I still think right now stuff like 6% is a little bit elevated. Off Putin says that's cheap compared to my 18.875% mortgage in 1982. Yeah. So David is here always to remind us of some context because, yeah. Roaring Titty says we have a 3125 assumable VA loan. We thought about selling lately because that's a good leverage for now. Yeah. Yeah. We use the VA loan as well. And VA loans typically get a slightly favorable rate. We're sub 3. So it's really, really good. That Lauren says I couldn't buy a house right now if I had 3 jobs. It's depressing. You could. I think that's a little bit of a disease that the American consumer has right now, assuming you're American, because you can. The problem is people have a lot of expectations and wants right. So it's a matter of managing expectations. So to say that you couldn't buy a house, you can, but what you're trying to say is you can't buy the house that you want. And that is another bucket, but it's not can't buy a house. It's you can't buy the thing that we want. And I find that especially with my generation, right? Because I'm 33, millennials, I find bitch and moan all the time about everything. It's actually the most frustrating thing to watch. And the whole just complaining about the housing being expensive, which I totally get. It's not cheap. But I think the problem is, I think the big problem with it is when you consider what's available, there's tons available. But Americans are so primed to get what we want or to have aspirations for stuff that we want that may or may not be reasonable for where we're at, that then we create this world where we think things are inaccessible. But I would just say it's accessible. That Lauren says it's hard with one income. Yeah, no, not saying easy, right? Definitely not saying easy, but it's definitely doable because I bought a house out here in California when I first moved out here. And I thought for sure I was buying at the top because I got stationed out here. And it actually turned into a really good investment, but I couldn't get, some really crazy Gucci house. I had to get what I could get. And that was what it was. It turned out to be a decent investment, but that's the point is it's a matter of, striking the balance as best we can. Roaring Titty says VA loans are assignable, not all loans you can do that with. Nice bargaining chip. Yeah, it's good. The problem though, again, is I don't think it's really advantageous to give up the VA loan. So the premium that I would include to give somebody access to the VA loan would be probably more than it would be worth to them. Because if you look at the rates that a VA loan will get you over standard rates, even on like moderately expensive houses, like if you're talking like 1 to 3 million bracket, it's obviously massive in terms of overall yield. So yeah, I think that the VA loan is a great tool. You still have to show the income. That's another thing I think people mistake about the VA loan is that, you can do the no money down, which is really good, but you still have to be able to support the payment. So at least for me, the VA loan offers access to people. But the other thing I do notice with the VA loan with a lot of people is they get in over their skis and they try to get too much house, which is a little bit of a problem because then you get strapped to this really high mortgage payment and you're kind of stuck. So yeah. Let's take a look at the rest of, we can kill this. Let's get through the rest of this. So we already talked about this. This is what I'm interested in. Equity investors are likely encouraged by factors like robust sales, inflation-adjusted growth in household income, improving consumer sentiment. As we recently noted, households have been exhausting their savings and grown more dependent on their paychecks. Again, we can see this. We absolutely can see this. And wage gains to continue spending. Also, defaults on consumer debt are rising. We literally just looked at that, so I see that as well. Conference boards measures whether jobs are plentiful or hard to get, which historically correlated corporate growth, have shifted more to negative outlook. This is early, man. And this is early ball game. So the fact that we're seeing these kind of movements at this point, to me, again, it's not like terribly bearish or anything like that, but I absolutely do not look at this and say, oh, bullish. I don't feel that at all. How are we doing on our futures position? Down. Great. Love that for me. Off Putin says, keep your California home as a rental. If you relocate, Prop 13 is kind to long-term owners per property taxes. I don't think I would. For a few reasons. Where I live now, well, before, where I live here, I'll grab Redfin. They have a really cool tool and I'll show you why. So if we take a look and we want to take a look at, let's see, we want to look at 24 and we want to look at, I wonder if they have Encinitas in here. Do they? Or just major cities? Yeah. So they'll probably just be San Diego. Yep. Do they have like North County? No. So we have to do San Diego. So if we look at San Diego, let me see. Nick, Vladimir Putin says parts of Texas property taxes are pushing some long-term owners out. Yeah, definitely. Absolutely, definitely. Off Putin says Oceanside. No, I think they won't have that if they don't have like Encinitas. Yeah. It looks like they're just doing the major metropolitan areas. So anyways, the average, I don't want rental though. I want homes sold. Do they have median price? No, I want, here we go. Median sale price. This is the beauty of San Diego, is that essentially since I've been here, home prices continue to go up. And again, like when I first moved in, I thought for sure that I was getting into my house at like not this house where I'm in a much different house. My first house that I grabbed when I moved out here, I ended up renting that out for a little while, but that was that was in Oceanside and that was very close to Camp Pendleton. So then I was able to make sure that I had military renters. And the reason why I prefer military renters, one is because I'm military and I know that if I have an issue with a military renter, I literally can go to the command. I can figure out where they work on base. And then I can talk to their commander who's going to squash the fucking problem without having to go through the legal rigmarole that is here in California. Now, where I live now in kind of Rancho Santa Fe, Leeuwenhoek area, it's completely different because here I'm just where a bunch of rich, waspy people are, and the ability to have good luck and have somebody move in that takes good care of the place is, part of it, because it's also a completely custom built house. So it requires a ton of maintenance in order to keep it, as we want it. So the risk is pretty high. We thought about doing something like Airbnb or whatever, but then you have to deal with all the liability off of that. So when we move, which will probably be in a few years, the game plan is literally just to take all the proceeds from the capital gains on this property. We'll put it into the next property as just a giant down payment on the mortgage so that we can drastically reduce the monthly overhead, because that's really what puts us in freedom, is that if you find a way to reduce your monthly overhead, then you do not need to have massive reliable income month over month, which becomes like a drug to people. I worked in consulting with Deloitte for a few years after I transitioned out of the Marine Corps. And you realize how smart companies and corporations are at making things just good enough. Just good enough so that you like your role, you like your place, you like your comp, you might grow a little bit. But notice how few people are retiring early from working in the corporate world. It's not impossible. It's obviously possible, but it's not common. And when I'm talking about retiring early, I'm not talking about retiring in your 50s, which is still early. I'm talking retiring in like your 30s or 40s. I think those are like what I would consider early retirement. And companies do a really good job making things just good enough so that you stay. And then what ends up happening with consumers that they don't realize, this actually is probably a perfect time to grab this. I'm grabbing my little whiteboard. I'm going to see if I can draw a piece of artistry for you. I might have to start signing these like Beeple, because I know what I'm doing is just really, really powerful. Here we go. Here we go. All right. So let's take a look at our drawing. Perfect. So let's say you're making your 100K a year. You're doing well. It's obviously a decent salary. It's not a ton of money, but it's a decent salary. And post-tax, depending on where you live, it'll be whatever. I'm not going to go into those things, but let's just talk about our cup. We have a cup that essentially we can start spending what we want, where we want. And with $100,000, you find a house that takes you, it's stuck. It's stuck on. There we go. So we have a house that's going to be a lot of the expenses. We have a car that might be another meaningful expense-ish. Might have 2 cars if you're married. So there could be another one of those. And again, in my opinion, these are the worst possible things. Do not ever take a loan out long-term on these. I use loans when buying new cars as negotiating tools because you'll get a much better rate on the car if the dealer thinks that you're financing through them. But all I do is pay the loan off, provided that there's no prepayment penalty, or depending on how bad the prepayment penalty is, it might even be worth the discount you get on the car. So loan on cars, literally always a bad move. The first thing here is straight up stay within what you can afford. If you can afford a $2,000 car, get a fucking Honda Civic or a Honda Accord and live that way, right? Until you can afford more. Because here's what happens. We start with these 2 cars with your $100,000. We have the Civic, and then we have a Tundra. Then maybe there's kids, if you have those, cats, if you have those, we have food, so on and so forth. So here's your $100,000, and it gets broken down into these buckets, whatever percentage. Let's call this 40%, and then so on and so forth as percentages. Now you get a raise. So now let's say you got a good raise. Now you're making $150K. Cool. Well, what happens is your cup just got bigger. But the problem is the habits tend to change. So now your house hopefully hasn't changed yet. But now instead of the Civic and the Tundra, you're like, well, shit, I'm balling now. I have more money. So I'm going to get a different car. And now I'm going to get the BMW here because those are kind of cool. Which, by the way, my first car was an 89 BMW 325i. Absolutely sick. Then we get a second car because, husband got one, wife wants one. And she likes the Mustang, whatever. So what just happened is we maintained our 40% exposure to the house, but now our car expenses in this instance combined, these might have been 15%. Now they just become 25% of your total expenses. And it's just because as our resources grow, people tend to commensurately grow their spending. And this is literally what golden handcuffs are. This is what keep people in this grind and why people feel like they don't have a lot of money, because each time they get an incremental bump, they spend it on shit. So then the idea for the savvy person is an alternate scenario where we get this same raise, we still have the same house payment, which is still at that 40% or whatever. But guess what? We get rid of our car payments. We pay them off. So now car payments don't turn into new cars. They become savings. So rather than scaling the lifestyle as salary scales, if you focus more on increasing your sources of saving and ideally growing your income by getting more promotions over time, those things together are what allow you to have eventually your cup runneth over with money. And that's where you actually gain freedom. Because if you're saving more and if you're maybe dumping that into your forever home and you're doing an additional principal payment every year like you should be, then all of a sudden your mortgage, instead of being a 30-year mortgage, it's 23 years and you cut off a third or even more of your total interest expense, save a bunch of money there. And then now your monthly expenses essentially become null. And if you're doing a good job investing at the same time, then all of a sudden it becomes a really powerful picture. So the genesis of all of that is to try to make sure that we have, and David says, and if you listen, Claire, you too can have a McLaren. That's exactly correct. Because guess what? Once you get to a point where your monthly costs are so reduced, you can't take money to the grave with you. So fucking spend it. Spend it on what you want. That's the whole goal. But the more you sacrifice like this early and you stay in your 1990 Civic, the faster you can do these other cool things. That is the entire point. It's delayed gratification. It's near-term pain for long-term gain. So then while in my early 20s, I didn't do much flashy, fancy at all, and I saved like a monk as best as I possibly could. I was super diligent with everything so that as my income continued to grow, my lifestyle didn't grow commensurately, and I just poured it into this bucket. And while I was pouring it into this bucket, I was building my trading skill set to generate better and better returns, starting to spread my resources into other things that continue to return on my capital. And then all of a sudden, it starts to make sense. And like David said, when I went and bought my McLaren, I literally bought it in cash. Just bought the car. All of our cars are completely paid off. We have no loans on any vehicles. When I went and bought the Corvette, I bought it in cash. When I'm doing work on the cars, because I like to work on cars, I do it with cash. There's absolutely no reason not to do that stuff. A big part of it is to build freedom so that you can spend on what you want. Because for me, I really like cars. For other people, it's probably one of the absolute worst investments you can have. So like if you're looking to get into a fancy car because you think it's like a status symbol or something, it's literally the absolute worst thing to spend your money on. But for me, I derive marginal utility. I enjoy my time in auto mechanics and automotives. I enjoy it. It's fun. But for somebody else, it could be something else that they really like. Maybe they really like getting specific kind of really expensive vegan food or whatever the hell it is. But it's trying to have a clear line of sight on your marginal utility items and then finding a way to get that without going through this vicious cycle. This is why I talk about the outlier mindset, because guess what? This is what the vast majority of people do. And then what ends up happening is they look back in their 50s and they're like, fuck, if I had just changed some of these stupid habits and instead focused on compounding my returns, probably would be in a completely different spot. But most people, after we get the pay bump, we deserve something else. I worked so hard. I should treat yourself. And that's the problem, is striking a balance between treat yourself, but also treat yourself so that you're not a wage slave and stuck. That's what most people treat themselves to. Reese says, I have no interest in cars or traveling. So when coming up with big goals, I can't find any besides have a bunch of money. Yeah, it's just a superficial goal. So, and there's nothing wrong with that, by the way. I also think we as people need to get past this thing where it's like taboo to say that you want a bunch of money. It's okay to want a bunch of money. But the name of the game is to like actually think about the stuff that matters to you. So for the Patreon members, I literally have, and I'll grab it for us so that we can look at a piece of it together. But for the Patreon members, I literally built a specific exercise on this exact thing. And the reason why I built an exercise on this exact thing is because I've gone through exactly what you're talking about, which is not knowing what really matters to me. So here, let me I'm just grabbing the file so that I can show you this. So the goal of this exercise is I originally literally built this exercise for myself because I didn't know what I valued or what I wanted. So Reese says, I play chess and work out. I just love trading. Yeah, that's totally cool. But the problem is like, even those people there's a balance, because a lot of us spend so much of our life managing expectations that we pretend we don't want things, right? So like, for example, off Putin, people make this wrong analysis all the time. And they look at somebody like Warren Buffett and they're like, oh, wow, Warren Buffett, he's worth billions of dollars, but he's so frugal. He just doesn't really care. He eats at McDonald's. He has an old house. The dude bought a fucking jet so that he could fly around where he wants. He buys new cars. Like, he spends on the things that matter to him. He's not like this monk that's just donating all of his money. He's donating tons of money. I want to be super clear. But I just think people misinterpret the actions of somebody like Warren Buffett. And they think like, oh yeah, this guy is he's here for the people and he doesn't really want much. He's a great example of how to have a bunch of money and not want much. Well, the dude has a fucking jet. That's pretty good, I think. So yeah, he might not want the brand new car because he's not going to spend much time in it as he's, heading over to go get in his jet. And I'm not shitting on him for having a jet. He should have a jet. But the point being is, even somebody like him who lives, I would argue, completely within his means, obviously, but he still spends on what he cares about. That's the game. So when we think about marginal utility and what I call the money mindset and marginal utility exercise, the whole point is to identify the things that we actually care about. Because there's a bunch of things that I try to remind people. When we spend on, again, material objects, that's a small part of resources, right? Like, I think some of the coolest things about having capital is what you can do for other people. So, for example, great example, I took a Lyft, 2 weeks ago to go grab a car. And I had one of the most enjoyable conversations with the Lyft driver. And I normally tip them well. But this dude, I had just a fantastic, like, we laughed our asses off the whole time. So at the end, I gave him a giant tip. I just gave him a giant cash tip to say thank you. Like, thanks for being a cool person. And because I have, fortunately, resources I can lean on, it's not just what can I spend and buy for me, but it's what can I do to enrich other people. Another great example, like the time I spend doing shit like this. the return on my time for doing this is null, right? And that's not to say that I don't appreciate when people donate and stuff. I always love that. I'm very, very thankful. But like, if I'm being honest with myself, like this is not a good actual capital return on my time. But because I'm in a comfortable position, I can spend my time doing things like this because I like to. I like to share this information with people. I think it's important for other people to learn this stuff, whatever avenue they learn it through. Because for me, I came across into this stuff by pure dumb luck and happenstance. It's not like I had somebody that pulled me aside to teach me. So the whole idea of resources is that you absolutely should do what you want with what drives you value. What is the marginal utility of your spend? So when you think about something like, again, I think it was Reese that was saying, that they like chess. I love chess too. I've played chess my whole life. Like, if you like playing chess, if you like doing these, like, that's cool. But guess what? If you have a bunch of money, well, maybe you can host a chess symposium for people that you want to help. That's pretty cool. Maybe you can pay for somebody like Magnus Carlsen, Hikaru Nakamura, somebody like that to come, and Gasparov, and have them talk to this group of kids about chess. That's pretty cool. And that's if you value that kind of experience, which is, again, it's up to you for what you value. So when you think about this idea of like, what am I doing it for? What do I value? That's what I'm saying is you have to go deeper. The material objects are such a small part of this thing. So one of the things I think about is like, I give myself different cases to study, and I give myself 3 different scenarios, right? So the first scenario I give is like survival. The second scenario is I have more than I could ever use. And in this case, literally, I used $1 billion in my scenario 2 analysis. And then scenario 3 is my current trajectory. And then I look between those and I analyze, what does this mean for where I'm at? And based on these different scenarios, how do I feel about different elements in this case? So for example, would I have a job? And I purposely start with just scenario 2 and scenario 3 from up here. I don't start with scenario 1, because scenario 1 becomes pretty self-explanatory. The idea behind scenario 1 is, again, to benchmark. It's to remind ourselves that even though our trajectory resources might not get us to a yacht, it's probably better than being homeless and having to dig through garbage cans in order to find your food. Like, that's minimal resources. So the first question is, if I had $1 billion, would I have a job? If on my current path, would I continue to have a job? And for me, the answer is yes. I would have a job in both scenarios. Like, I sat down and I really put myself in this scenario, because the other thing people do with this stuff is just like very superficially think about it. And we just kind of talk about like, oh yeah, I wouldn't want a job. I would just want to do whatever all day. But if you think about it, and you think about what you value as a person, and you think about the impact as a person, well, the impact is limited. So like, for example, me as a trader, right? That's a solo thing. And I'm very fortunate. I do very well as a trader. But guess what? My ability to do well as a trader impacts me and what I spend my money on, or what I put myself around. So if I think about my ability to impact and help other people, which is genuinely super important to me, it's null. As a trader, if I just traded and did none of this, like, I consider a lot of what I do here philanthropy, because I'm providing time, and which is my most valuable resource by far, and a skill set that I've spent thousands of hours researching with people just sharing it, right? So I consider that philanthropy. So in this kind of thing, trading by itself, I can get resources. But then after I have the resources, it's what do I do with the resources that drive me and fulfill me? And that's the whole point of going through these different scenarios. It's thinking, even when we have tons of resources, what would things look like? Who would we be? And what kind of impact do you want to make as a human being? a big question. And it's one that I think about all the time because there's different ways to make an impact. And I think that you have to find a way that makes sense for you because realistically speaking, not everybody has this weird drive where like the marginal utility of helping somebody for me is very high. I've always viewed it as like a duty. Today, when I was going to physical therapy, there was, I literally came up on a car crash just as it happened. So the first thing I do is block traffic, go over, and I just try to help them as best I can. So before I get to my appointment, make sure everybody's good, help move the cars out of the way, and then go to my appointment. I'm always that guy. And I don't know why, but I'm just wired that way. Not everybody is. A lot of people are wired slightly differently, and they might want to help somebody in a different way that I can't. My mom, for example, primary example. My mom's an occupational therapist she's retired now, but she was an occupational therapist for people with mental disability, like genuinely retarded people. And there's no chance I could do that. There's no chance I could do that because every time I would go visit her at work, seeing her work with these people, it literally, it was inspiring and heartbreaking at the same time. And that is so difficult to do. And to have the right disposition to do something like that, like that's not my skill set, man. I just don't have that. So I think the main thing is trying to find ways that you derive utility as a human being. And again, the material things, it's a small part of it. It's a really small part of it. It's funny when a lot of people ask about my cars, because I do have 3, and I have a truck and 2 cars. And most people are really, really surprised to hear that, like, if I had to sell one of my cars for whatever reason, I would sell the McLaren every single day and I would keep the Corvette. And that's because most people are primed to think about the material value of something and then the reflection of their self-worth, which is not how I grew up. And it's because I grew up poor. That was never my lens of the world. So I would keep the Corvette because that's the car I wanted from when I was a little kid. It was like one of the first cars I ever worked on. And that was like paying homage to my uncle who got me into cars because he had a white Corvette Stingray. That's why mine is white. So, but that's because I clearly identified my personal marginal utility with respect to that specific thing. And I think going through that process is the most important thing you can do, because if you think about your daily existence on Earth, it is limited. One of the Stoic practices that I really love every single day, one of the Stoic practices I follow is visualizing my death. Every day I do this. I sit down, I think about what it will look like looking at myself dead. So typically I think in some sort of like coffin with the thing open because I don't want to be in a closed coffin, but like I think about like the color of the cloth, the wood. Where is it? What kind of room am I in? Like all of those small details and like put myself in that place. And the whole point of doing something like that is to remind ourselves of our mortality. And that just like in trading where your performance is built on the daily execution of your duties built up over time, that's the same thing that your impact as a human being will have. And there's different levels. There's somebody like Elon Musk, who will probably be in different books. Like he's going to be somebody that's going to be looked back on as pivotal. I'm not going to be in a single fucking book. And that's okay. I'm okay having a smaller scale impact, but high touch, trying to help somebody when they need it, work with people as best I can. Like that matters to me. And I'm okay with that. Now, for some people that really get this urge to have this big scale of an impact, well, that needs to be built on daily actions as well. So all of this stuff feeds back into every single decision I make as a trader. This is why I talk about this idea of begin with the end in mind. So if we're thinking that our end, going back to Reese's, when we talk about, trying to figure out what we value, well, that's what drives the daily behavior. Is that I know if I do a good job and I execute this, even though we have more than we need at this point, I still am building. And it's because rather than I already got to the point where I can take care of my mom, she's retired, she's completely good on all of her expenses at this point. So then we're good at this point. That's the next threshold. So then it's like, what else can we do? Well, if we have a kid, then obviously that raises expenses, but then also the ability to help surrounding peripheral things. And even the stuff that I do with like the Patreon, like I think what I do there is so grossly undervalued, to be completely honest, for what it is that I share. But the reason why I do that is just so that I'm not pouring both time and money into the YouTube channel. I can dedicate the time, but before I was like paying the video editors and stuff like that, it's like that's just irresponsible at a point. So to come up with some sort of cycle that essentially feeds itself, that's what I do now, is like everything that I make from YouTube gets reinvested, and I also still donate a portion of it every single month to the Wounded Warrior Project. So, and again, that's because it's something I really believe in. So marginal utility is the great driver of all of this stuff. And coming up with a crystal clear analysis of your marginal utility as a human being, and that's not limited to material things, is the way. It is the way. And then once you start identifying what you value as a human being, what you want to be as a human being, then all of these other things start to line up really, really neatly with one another. And we can avoid doing this game, where as our costs or as our income increases over time, that we don't get to a point where our expenses continue to raise too fast. So yeah, interesting conversation. I really like the psychology of money. It's like a really, really interesting thing. There's a lot of like social faux pas where people think that if you want money or if you desire money, you're superficial or, you know, that kind of stuff. And it's completely bullshit, right? You as a human being are what determines what kind of person you are, not whether or not you are capitalized at all. What I try to think about is if you're a good person before you have money, or if you're a happy person before you have money, money is literally just an amplifier. Like the fact that, you know, when my wife and I travel, the fact that we can go frolic around really wherever we want to go and experience these really, really cool places, that's fun from a fulfillment perspective between my wife and I. But then there's different levels to it that even when we're traveling, I always make sure to take care of the people that are around me. Like, and I think finding those small elements of humanity, that's where I drive a lot of my marginal utility from. And it's definitely has taken me a long time to figure that out, because for a long time I thought it was weird to want money. And then I realized it's weird to be a shitty person. It's not weird to want money. Wanting money is literally the single thing that unlocks yourself, is money. You don't have to dress a certain way at your job. And that doesn't mean that you have to be like a dickhead and be mean to people, right? You can be your truest expression of yourself. So some of the things that come to mind from like a corporate setting for me is that, for me, I curse a lot. If I'm in a more professional setting, or if I'm giving a talk to a college or something like that, I always turn the cursing off. It's not because I'm, you know, scared of being myself, but it is to be more thoughtful of that kind of crowd. Kids in there, something like that. I try to be respectful, but I don't have to change who I am as a person in those settings to preserve my standing. So for example, if I'm working at a corporate job and I have a boss that's telling me to do something that I fundamentally disagree with, I wouldn't do it, because I don't have to do it, because alternate resources are available. So literally by having enough resources, it is the enabler for you to be and do what you want as a human being. And the material component is absolutely part of it. And it's okay to want nice things. Yeah, I think it's okay. I really do. There's a reason why I bought a McLaren and I didn't get a Honda Civic. I like that car more. And I don't think there's any problem with that whatsoever. I think it's okay to want things. What I think is not okay is if materialism starts to define you. Because again, let's say, for example, something terrible happened and I needed the money, or let's say, I had to get rid of the car. I wouldn't possibly, I couldn't care less. Yeah, it would suck. I like driving the car around, but if I had to get rid of it, like, I don't care. Get rid of the car. Fine. So it's like, I think striking that balance between understanding the things that you like and not shaming yourself for wanting certain things, I think is okay. I think it becomes a problem when you become overly materialistic. That I think is dangerous. And I think that it's a perversion of values. And I actually think a lot of us that are poor are predisposed to that. Because for me, I always took the utmost care of all my shit because there was no way I was going to get another one. And that took me a long time to break that psychological thing, because it would make other people uncomfortable. Like I like knives, and people would want to come touch the knives and stuff. And I would be like cleaning them after they touched them, because the oils on your fingers, it's not good for the knife, but like it would make, that would make them feel uncomfortable. Now it's like, I don't fucking care. Like if somebody wants to take a look at the mammoth tusk that I bought, and they want to, touch the mammoth tusk because it's incredible to touch something that's 20,000 years old. Cool. Touch it. It's very cool to be able to do that. Whatever. So it's like part of that is striking a healthy balance between the material things, but not letting the material things control you. And that does get easier over time, I think, for sure. Lauren says, growing up poor also makes you worry about money even when you don't have to. That's a disease to get through. If you grow up poor, scarcity is everything. Scarcity is the mindset. Another thing I did forever was literally capture every usable item that I think I could ever need again and save it and squirrel it away. So if I was working on something and I, have a bolt that's left over, to save that bolt. And even if I have a partially used zip tie that I can salvage, save that zip tie. And it's like, it's a fucking disease, because to me, that starts to lead to clutter. And again, it's all about balance, because I don't believe in wasting things, right? Funny about the zip ties. I literally just picked one up in my driveway that somebody left, and it would have been easier for me to throw it out, but it was a perfectly good zip tie. So I kept it, put it in the garage. But the point there again is being able to strike that balance between the things that we really, really, value and who we are as a person, but not letting it become problematic. Because when my dad died, my dad was essentially like a straight up hoarder. And going through his house after he died was that it was I grew up, going to his house once in a while, and like you had to walk through channels, right? Like you couldn't walk through the house. You couldn't see the floor. There's like fucking game trails that you would do to like get to certain spots. And that was always very informative for me. And I knew that I never wanted to do that. Like I never wanted to have that kind of lifestyle. That's why if you ever take a look at my office here, I have my office is a big room. I don't know. It's like kind of difficult to show you what it looks like. Maybe I'll do like a YouTube short or something so I could show you. But the office is big, and it's fucking empty. I have this desk. I have that behind me. I have a printer there, a whiteboard. I have an inversion table now because my back's fucked up, and a telescope that I bring outside. Like that's it. There's so much. I could have a desk. I could have a bed. I could have a ton of stuff in here, but I don't just fill it with things because of that. So yeah, I think being poor is important to identify, because there's a lot of innate characteristics that come with it that I think can be dangerous if they're allowed to go too far. I think that leads to things like hoarding. I think that it leads to things where you start having friction in relationships unnecessarily. So like another thing I think about is like when I go out to dinner with my friends, I literally always pay. And I have military friends, so they'll always Venmo me afterwards. But I literally could not care less if they did. I'm always thankful for the gesture, and it's, I appreciate it. But if they didn't for whatever reason, I literally don't care. And what you'll find is when you have more of an abundance style mindset and other people around you have a similar mindset, then all of a sudden people take care of one another. And it's not a function of itemizing my fucking dinner receipt with my friends to make sure that I don't pay for their 2 drinks because I get water because I don't drink alcohol. Like I don't fucking care. And that is really enlightening. It's just like a very lightening feeling to not have to worry about that stuff, not worrying about nickel and diming who paid for what, when. Like, I don't care. I literally don't care. It allows pure focus on the relationships. Dave Swag says, Eric, being vulnerable and talking about life are my favorite things about trading time, especially with our histories of poverty. Yeah, man. I feel you. It's something I think it's important to think about and remember, because it's easy to forget. I make myself do a lot of things on a daily basis to always kind of remind myself of, even though I'm in a very fortunate spot now, that it hasn't always been like that. And it's easy to forget what that's like and what that's like for other people. Because sometimes when I'm talking about like this stuff, right, and I'm talking about like this aggressive savings campaign, people will be like, oh, it's easy for you to say you have a bunch of money. And it's like, I understand that perspective. But what got me to having a bunch of money was actually was doing this. So I try to share it from that perspective, and I try to connect the dots for people so that it can be really difficult to see the outcome of the effort. And if you don't have any way to visualize the outcome, then it becomes very, very difficult to continue prioritizing doing something that you don't want to do. That's actually why it's literally why I built this for us. And again, this is something that's not cheap to build because I don't know how to do it. So I have to pay a dude to do this. But this is exactly what I would spend all my time on. This is how I visualized what this was going to look like for me if I got good at trading and if I stuck to the course of growing my savings. This is exactly what I looked at. This is why I built it for you, is so that, because this is the tool that I used, so that every time I'm sitting there thinking like, damn, like I want to go out tonight, or I want to do whatever tonight. Maybe I can go out and I just don't have to buy anything. Like I can just hang out with my friends. Well, that sometimes can make your friends feel uncomfortable if you're trying to be like super frugal, but you have to figure out the social situation. A lot of my friends understood what I was doing. And again, that's the beauty about military friends, is there's such a strong bond that there's not a problem. Like when we would go out, they would offer to buy me drinks, even though at that point I already had way more money than them. And I was just like, thank you very much, but like, there's no way you're going to buy me a drink. I'm not drinking, so I don't spend the money. I'm not going to spend your money because I'm too cheap to spend mine. That's utter bullshit. But this is what made all of that worth it to me. So when I look at, again, like if we take a look over a 20-year time frame in your early 20s, and let's say that you're able to maintain, to start, stock market return, and let's say that you're able to save on average $1,000 a month. Well, in that time frame, essentially, you cross the $1 million threshold. That's starting with $5,000. And again, I always remind people, sometimes they'll see some of these contributions and they'll be like, damn, like that's a lot of money. I don't think I'll get that. That's why I say the line, you can't save your way to wealth. You have to expand your income. It's a non-negotiable. So, because again, going all the way back to what started this whole thing, corporations are really, really fucking smart. And they're going to pay you just enough to keep you there. They're going to pay you just enough so that you can fund a reasonably good lifestyle and continue, but you're not going to have buckets of money falling out, or like piles of money falling out of your pockets. So growing your income is literally a non-negotiable. And there's a ton of ways to do that. The problem is it's not necessarily convenient. It's not fun. It requires doing more work. But there's really a handful of discrete levers to make this thing work. The first thing is to save more money. The second thing is to grow your income so that you can do the first thing, save more money. Then it's get better at trading. Because here's what I remind people. If I get rid of this savings and we start with a $5,000 account, let's say even if you're a rock star trader, you get 25%. Guess what? Over 20 years, you have less than $500,000. Literally less than $500,000. But take a look at this. If you saved $100 per month, you go from $500,000 to $850,000. by saving $100 per month. In the beginning, to get this process started, the scalable slope of money, this is where it comes from. Saving. You have to save. And then what will happen is as you save, incremental savings as your capital grows will become less and less important. So let's take a look at now a new example. Let's say just at something at like a 5% return. And then let's say, you're already into your journey. Let's say that you started at 20, now you're 40. You're looking over the next 20 years. And let's say in that time frame, you hit that threshold. Well, let's say we have $500,000. Well, guess what? That $500,000 over the next 20 years at that 5% is 1.3 million. And notice how trivial that extra $100 is now. It takes you from 1.326 to 1.366. It's still a 40 grand. Like that's still not a tiny amount of money. But if you take a look at this, it's not a giant difference because at this point you are already at scale. Now is when it is important to get better at trading. So for example, if instead of being a 5% trader, you're a 10% trader, now you have $3.3 million. That's the difference. In the beginning, savings, income, vast part of this path. Once you have capital and you're at scale, better trader. The problem is most people start like this. We start with our $5,000 and we want to get rich fast. So we're targeting this 25% return. But as we're targeting that 25% return, we're taking a look at, let's say your portfolio variance is 35%, something like that. So if and this is why traders blow up their accounts, is because they're starting with a tiny amount of money, trying to get this crazy good return, not understanding that it literally doesn't make a fucking difference. What makes a difference is how good their contributions are, how well they can save. And then once you have investable principal, then it becomes really important to get this rate of return dialed in its entirety. And Charlie Munger is the one who talks about this $100,000 threshold. I think it's a pretty good threshold because if you take a look at the difference between an 8% return and a 10 or 6% return, you essentially will notice that the variance becomes actually quite meaningful. Because if you have an 8% return, you have $466,000. If you get just 2% above that, you're now at $672,000. So at that $100,000 threshold, the percentages now matter a lot. But most people have the cart so far in front of the horse, and they're too worried about trying to trade their $5,000 account into their future wealth, which is just not going to happen for the overwhelming majority of people. There will be some that do it that are very lucky. This is akin to the lottery winners. There will be people like that. And it will be completely cool to find those people, learn about their experience, celebrate with them. But it's probably not going to be your reality. It's not my reality. Absolutely was not my reality. And for the vast majority of people, it's not how it goes. So the question is, what's the way that we get there? And for me, the way that we get there is kind of in these two different phases. Phase one is focusing heavily on income and savings. Once we build that base layer of wealth, phase two is getting a better return on our money. That is where we get better as traders. So yeah, super fun conversation. I love talking about all of this stuff because for me, the technical component of trading is what it is. It's actually funny because once you have the underlying level of technical proficiency as a trader, it genuinely is pretty easy. Like trading is not that difficult. But getting to a spot where you can deploy the skill set is where the game is, and making sure that you have a good path to get there. Tommy says, save, learn. I keep telling myself that's literally perfect. Because again, the only thing I would add on top of that is grow the income. Again, to get to that first $100,000, it is so variable on how much money you can save. It's insane. So if we take a look at where the threshold is that we cross $100,000, and again, we use just $5,000 on the rate of return, we literally don't hit it. We don't even hit it. So then let's say if we're able to save $100, well, now we're still not there, but we're close. We're at 78K. So now if you do $200 a month, you hit it. You now hit that $100,000 mark that then you can continue to build off of. So then it starts to get really interesting when you're like, well, shit, maybe I'll pick up a weekend gig and go do something. I'll do something around the neighborhood. I'll fucking mow lawns. Like, I don't care. For me, what I used to do was hard money lending, and I used to flip cars and I flipped motorcycles. I was able to tie hobbies, auto mechanics, and a skill set, auto mechanics, into something that I could also extract value from. So that's one of the ways that I would increase my contributions is I would buy broken cars or buy motorcycles by haggling the ever living shit out of somebody and then getting in the motorcycle, enjoying it for a few weeks and then selling it. Take those proceeds, roll some of it into a new deal for a motorcycle, roll the rest into the market. That's all there is to it. But a big part of it is getting really, really thrifty with what you can do within your personal scenario to increase your income. There is no substitute for increasing your income, because having your savings rate redlined is a non-negotiable. That's the lever you can pull on first. You have complete control over your savings rate. So once that lever's been pulled, we have a really aggressive savings rate. Perfect. Now we need to pivot and we need to keep that savings rate pulled, but we need to increase our income. DoorDash, Uber, whatever it is. And guess what? When you're being an Uber driver, maybe try to do a really good job with the people. Try to be really, really cool. And a bunch of people will be absolute pieces of shit. And they're going to be really, really bad. They're not going to give you a good tip. It's going to be shitty. But every once in a while, you'll come across somebody like me who really values somebody that's super cool. And I'll give you a tip that overcomes the lack of tip from the last 20 people. So it's just like in trading. When you're trading, you're going to have a bunch of losing trades. And then sooner or later, you'll have some big winning trades that overwhelm all the losers. It's the same thing with something like a service-based thing. But the point is you have to be really, really thrifty with what you're doing. Absolutely. Day Swag says, does Mel have the same philosophy about money that you do? Largely. Her approach to building wealth before she met me was completely different. She went into a career field that she could make a lot of money in. And her goal was essentially to focus that. I've always been like a hustler. And what I mean by that is not like cheating people, but it's always having like my hands in a lot of different things at once, right? So even when I told you in college, I was doing a bunch of things for money. I was hard money lending. I was trading. I was flipping cars, flipping motorcycles. I was a handyman for a while. I used to race cars and bet. So it's like I did a bunch of stuff, but that was always my vibe. And Mel's vibe is different. She wanted to like really focus and get completely sucked into this, a career field that pays really well and then use that. So there's definitely different ways to do it for sure. All right. Well, really fun general money conversation. I have a little bit left. I'm going to open up the door really quick for Thor, and then we can dive in and take a look at whatever we want to. What are you guys thinking? Some Mexican for dinner? Is that the move here? I feel like I think a carne asada burrito. Tommy says, I used to tell people if they want to make money, learn to code. Now it's learn to trade. Yeah, well, that's the funny thing. Is a lot of these like solutions, we have to be really, really, really dynamic. right? Because if you think about the changing landscape, it's not insignificant. We have a complete change in the world unraveling in front of us. Roaring Titty says, I'm bored of Mexican already. Yeah, probably surrogate through me. I'm not a foodie, as you guys may or may not know. So I essentially find a few things that I like and I just get it over and over again. Cause like, I don't care if I've said this before, if there was a way, I don't know if you've ever seen, let me see if I can find the clip. It's one of my favorite clips. Well, I haven't seen it as a clip, but it's my favorite part of the movie, The Fifth Element. Let me see if I can find this. Yes. So from The Fifth Element, if there was a way, I don't know, it's like a space movie, but it's an old space movie. And if you take a look at this, she takes like this bowl and she sprinkles these little pellets in the bowl, as you can see there, sprinkles those pellets in the bowl. She throws it in this microwave and then it comes out as that, which is super cool. However, my preference would be to just be able to put that in my body and not have to even bother eating it. That would be my goal. But I think about those all the time, and I think we need to solve that at some point. That's the goal. Wow. I just realized this looks crazy. Looking back at it now, this is hilarious. Yeah, okay. So that looks like I belong in a madhouse. Gonna delete that. And let's get back into these markets. All right, so let's see. Vladimir says, what is the percentage of self-directed retail traders that are actually successful? It seems like it's very, very low if you can trust that study. Yeah, fair enough. This is another thing that I think is really important for people to know. So I literally put it on my website for you. So if you go here and there's a thing called Do Traders Make Money? What I do is I show you some of the summary statistics of trader profitability. And then I show you essentially a bunch of different studies. And rather than cite studies or numbers that don't mean anything, because people do that all the time to sound smart, but it's really annoying because they don't offer you the ability to look it up for yourself, I make sure that you have the ability to look it up for yourself. And you can take a look at the individual studies that are cited above to arrive at your own conclusions. But essentially, there's 7% of traders that remain in the market after 5 years. That's the magical threshold that I outline for people is 5 years is the target. Now, the other thing I can say like pretty comfortably is that if you think about the majority of traders, right? So if you think of this 93% that flop, like break that 93% down, which I just realized I mistakenly closed this prematurely because I think it's good for this example. Because the argument I'm going to make is that the probabilities are probably better than most people might think. And I genuinely believe I'm an example of those probabilities because I am not that smart. I really am not that smart. So the fact that I can kind of figure, whoa, that's loud. Sorry about that. The fact that I can figure some of this stuff out, I think is useful. So then let's take a quick look at this pie of traders, right? So we just confirmed that about 7% remain after 5 years. So that leaves us 93% that drop out. So then of that 93%, let's reconstitute that as a new 100% just out of ease. If we think about this residual 93% like this, who do we think this is? Sorry, thank you. Who do we think that this is? I would argue that at least half, and this is probably really, really lowballing. I would say at least half, 50%, at least are summary, lazy, half-hearted, I would just bucket this as non-serious. And again, I think that this is probably lowballing it. If I were to really like truly estimate what I think this is, it would probably be something more like this. I would guess 75%. And what I'm thinking here are the people that they're not trying. They think they're trying. There's like all these different levels, right? Let's literally take a stroll. Let's take a stroll together. Let's go through options, right? So let's see. They're selling a 5 put, first time selling a put, trying to get into the wheel strategy. If I were to take a look at this person and talk to them, if I were to ask them, hey, like, can you show me just a trading outline, not even a trading plan, but like a trading outline, genuinely, who here believes that they right now have a trade outline, not even a plan, a trade outline done? Who here believes that that person did that? Genuinely. I don't. I don't at all. G36 says no. Day Swag says absolutely no. I certainly don't. And guess what? Just because you make a trade outline, does that make you successful? No. That's the very first step of the process. So then if we go through and we literally scan, and again, like think of the cohort of traders that try trading, but then they take the time to make a Reddit account and then post on Reddit. So this isn't even the lazy trader. This is the very, very first layer of a trader that is actually attempting to try. And I still would call this, even this here, I would call this next to zero effort. That's what I would call this. So then think of this whole universe that we're talking about over here. I just showed you an example of somebody that I absolutely would argue falls into this bucket, but they still have done something. They still took the time to go onto Reddit to make a post and try to do something. But this still is like they're light years away. Because then if we go back and we take a look at something else, I'm going to grab the keyboard. This is absolutely hilarious, by the way. I love this. That didn't take long, did it? So this is a couple scrolls and I find somebody that's down 99.18% on the year and just kind of throwing stuff out there. So then this is another layer. This is another constituent of this sample. So when I think about this 93%, and I genuinely break that 93% out into a bucket, this is what I see first. The vast, overwhelming majority of people doing shit like that. Then you will find a cohort of that. Let's call it 15%. This 15% think they're trying. The reason why I say think they're trying is because these are the people that say like, oh, I've spent X number of hours doing this, or, oh, I look at the markets every day, or, oh, I trade a lot. And then let's take a look. Let's see if we can find some of these traders milling about here, because I guarantee you that they're there. Let's do the options sub for this. Okay. Let's see. Here, we already talked about this one. So here we have this person, Eliuma, who for the past 30 days tested 7 different strategies. So you don't have to. It's very kind of them. What is this? What does this mean? What does this tell me? This tells me this person thinks they're doing work. They think they're finding information. Do I think that they have actually found information? No. This would still generally, in my opinion, fall into that broader bucket. I'm seeing if Mel's down for Mexican. She's probably going to shoot me down, but I already have the order started. So my hope is that will pressure her into essentially just going with that order. But this is a prime example of somebody who thinks that they're trying hard, who thinks that they're putting in the effort, and subsequently not. Damn it, she passed. Fuck. What do you want? We'll see what she wants. So this here is this cohort. 15% or so, I would say, of this 93. And then for the rest of this 93%, again, breaking this down to 100% total sample, I would wager that the remainder of what you see here, so even though these pies don't line up well, but what is it, 10% remaining? These are people who fail. And there's going to be people who fail. There's going to be lots of people who fail. There will people, Carl Indian barbecue. Pass for me. I'm gonna probably stick to my guns and do Mexican. So when going all the way back to Mr. Off Putin's original point of like trying to understand, you know, like what we think, oh boy, that up, sorry. Of trying to understand like what the capabilities are for people and where I fall into this game. I've never taken the argument of you know, really high failure rate as a large discerning factor for me for something that I genuinely think is possible. I find something like the markets to be different than something like trying to become an Olympic level athlete, right? Because that is really low probability. And if I tried to take my entire life and dedicate it towards that, even if you become a gold medalist, you don't make a ton of money necessarily inherently. Some of them do very well, but not all. So then it puts you in this weird spot. So that kind of scenario is different to me. But for something like this, I knew that if I started trading and if it didn't work out, I could always just switch to passive investing, which I do know works. Jeffrey, thank you very much, Jeffrey. I think that will cover some of the quesadilla. Appreciate that very much. Jeffrey says, if weekend theta decay is built into options price, if my portfolio is positive theta of 100 per day, after 1 month, would theta accrue 3K or 2.1K? $100 per day. No, you know this. Jeffrey, you know this. You know this, Jeffrey. Jeffrey, you still with me here? Let's take a look at this example together. Because you know this. Okay. So let's take a look at general portfolio or whatever it is. We can do, let's go into on demand really fast. I think this would be a good example. And then let's go, it doesn't matter when we go. We'll just do something current. We'll do like January 2nd. Good time. While this loads up, you're back. think sub 1 minute. All right, so you're guessing 3K. Let's take a look. So let's build a portfolio. What tickers do we want to drop in here? And we'll take a look together. Lunar look into, yeah, we can just drop some Lunar in here for the fun of it. LUNR. And let's say we sell some puts so that we're getting some theta. QQQ. All right, we'll do QQQ. We'll do Lunar and QQQ. So we have QQQ. And let's take a look at selling like these 45 DTE puts. And then let's do like these 30 delta. That's great. And then let's do like 5 of them or whatever. I don't know if this will actually have enough money in this paper account to do that. Does it? It does. That's great. Cool. So we have our trade. Okay. So now, what is our theta? Our theta is 4016 here. That's our theta. So now, what does this mean? What happens to this theta as time passes? Any guesses? Because most of you are going to think theta accelerates, which is not wrong, but you have to remember the context of what that means. Exactly. I anticipated that response, Jeffrey Jones, but you have to think more deeply than that. So when we're 45 days out, is there more or less extrinsic value in the options? And that will start to move you on to the correct answer. Less here as it's a put, right? More extrinsic further out in the time frame. Yep, exactly. So Tommy and Jeffrey are correct. Jonathan, it wouldn't matter if it's a put or a call. So the way that it works is options that have more time to expiration naturally will have more extrinsic value because they have more time value. So what's the most we can make on this trade? What's our maximum amount of theta decay in these options? We already know. What is it? All intrinsic. You mean extrinsic, Jeffrey? Because these are out of the money puts. So this is all extrinsic value. That's the most money we can make, right? So then let's just go through a thought example. If right now this is telling me I can make $40.16 per day, so $40.16, and there's 45 days left, that gives me 1807.2. I collected 517 bucks times 5. That gives me 2585. So there's a variance there. How could that be? One, honestly, because it's paper trading, so the numbers are going to be a little bit wonky. But more importantly, you already know what your max is going to be. So then to predicate it on a fixed daily value is already the wrong mindset. But that part aside, let's take a look at another example. So right now, we have the 31 delta puts, 395. Let's take a look at those 395 puts here. What's my theta now? I see 11 cents. So what happened to my theta? If we go out here, my theta is 8 cents. If I look at the same option, that's 17 DTE, my theta is 11 cents. So what does that tell me? G36 says theta is going down, but theta decay increases. Exactly. So what has happened is my total theta, amount of theta, extrinsic value in the trade, has gone down. It's gone down, again, using this as a surrogate option, from my sale of 517 to like $2, call it. And I can also see that my theta decay has actually gone up because now we're closer in time. So if I were to put this same trade on now, guess what my daily theta would be? It would be different, right? So in this case, I can see my daily theta for these 5 lots is 40.16. If we put on a 5 lot at 11, it gives us $55. So going back to your original question, Jeffrey, is that it's not linear. It doesn't mean that you're going to get a theta of 100 per day, and then it's going to stay linear, $1 per day or $100 per day over the life cycle of the option. It's going to change. And your daily theta is going to be relative to how close you are into expiration, because then guess what happens? Let's say if we go to 7 days and we take a look at that 31 delta, your theta now is 17 cents. Then if we go to 1 day and we take a look at the 31 delta, your theta is now 38 cents. And then if we go to 0 days and we look at a 31 delta, your theta is now 29 cents. So it continues in this example to go up. So your daily theta would change over the life cycle. So it wouldn't be a linear progression like you're thinking of. If it shows you a theta of $100, that you're going to see $100 per day. That's not quite the same. Now, a more important example though, is let's take a look current day in Qs, and let's take a look at a further out of the money option. Let's take a look at like the first 1 delta that we find. So when we look at this 1 delta put, that's 1 day out, my theta is 5 cents. If I go to a 1 delta put that's 58 days out, we have to add some more. My theta here is 3 cents. So what did I just show you? I showed you an example where the theta as a gross dollar amount decreased as we got closer in time. It's lower here now. For some of them, I should say, got to clarify. Because some of these are at 3 delta, or some of these are at 3 cents, some of these are at 2 cents. So what ends up happening in this case is there comes a point, depending on what kind of option you select, that if it moves far enough, then it can actually have less theta than what you started as. So an example of that would be, let's say I sell, actually, let's go back into on demand. I think this would be a good example. So right now our theta is $40.16. Question: what will happen to my theta if the underlying goes up in price? What will happen to my theta? Let's say it goes up $10. What's going to happen to my theta? And again, in this case, I'm talking about the actual definition of theta, which is the rate of decay of extrinsic value. What would that look like? Nothing? No. It would change. Nope. Jonathan also wrong. It would change. Good guess, but yeah, it would change. Because what happens? Remember, when we're selling options, the primary profit factor is still direction. It's still direction. So if I sell a put here at $3.95 and I did it for $5.17, and then let's say the underlying goes up 10 points. If the underlying goes up 10 points, my $3.95's a comparable surrogate option is actually this $3.85. That's what these would look like. So because right now we're pretending spot price is 404. Now, if we kind of mentally, I call it using surrogate options, but if I mentally pretend that QQQ instead of being at 404 is actually at 414 and moved up $10. That means my 395s will look like these 385s. So these 385s, they have a theta of 7 cents. So because the underlying moved in my favor, the premium of my options would decrease it would go from 517, in this case, down to like 313. So now there's less total theta available to come out of these, because now it still needs to be amortized over 45 days. So there's less total theta, meaning less theta per day. So if you get a directional move in your favor, that's also going to decrease the total theta that you have in the options, because there's going to be less total theta in the options. This is why places like Tasty will focus on managing winning trades, because as you get a directional move, you're essentially holding the same position, the same risk, but you're collecting less on the time that you're holding. Now, I don't agree fully with their approach. I think there's a better way to do it, but I also understand their approach. So let me know if that makes sense. Jonathan says, I'm still learning, haven't even started paper trading yet. You should start paper trading immediately. I literally just put a video out about paper trading, because you literally have nothing to lose by starting to paper trade. And I think, oh wait, no, that's a lie. My paper trading video is coming out this coming Saturday. My bad. So you can't watch that video yet. Sorry. Because it ain't there yet. But yeah, I think you should start paper trading right away. The sooner you can paper trade, the better. Okay, so Jeffrey and Tommy are on the same page. Beautiful. Yeah, and that's perfect. Because, again, understanding the way that options behave is highly, highly informative. It gives us a ton of information on how we want or think things should behave. So I think it's kind of an issue for people when we focus only on isolation events with options, because they move, and it kind of leads us down the wrong path. Day Swags. Okay. So Day Swag says, why track something like theta for success for a trade? I'm not trying to be mean or dismissive. I just don't understand. It's not Day Swag. You wouldn't track theta as the driver of a trade necessarily, like as as you put it. You wouldn't track theta as the success for a trade. You would track theta as an input to the trade, because realistically speaking, again, for Qs, the way that this makes money is by extrinsic value going away. Whether extrinsic value goes away because the underlying moves in our favor, that's one method. The other way extrinsic value goes away is if we have time passing. So if we take a look at the Analyze tab here, I don't know if it'll show it. It doesn't. That's kind of annoying. Let me go out of On Demand. I'll show you in here. Oh no, I think it works in here. It might just, whatever. We'll just do it here. So if we take a look at another similar Qs position and we sell these 29 delta 30 DTEs, something like that, let's take a look at what happens as I fast forward time. What I want you to do is notice how this purple line approximates to the blue line. The purple line represents today, the blue line represents at expiration. This is under the scenario of no price movement. This is saying price hasn't moved at all. We are just passing time. So as I pass time, notice how that purple line approximates to the blue line. That's theta. So the reason why Jeffrey cares about theta is because it's part of the way that his trade makes money. Now, I would offer to anybody who sells premium is that I think most people who sell premium have a perverse relationship with theta, and they absolutely overvalue how much theta they're collecting, and they misunderstand. And I'm not saying this is for Jeffrey, just in general. And they misunderstand profit mechanisms, because I would rather have something that experiences less theta and more of a directional move. I'll make money faster. But we, again, get taught these small isms where we're like, oh yeah, okay, like I like theta, or I want to have more theta. And I like to run positive theta, by the way. That's my preference too, is on the portfolio level to have positive theta. But that is a secondary factor in these in these examples. Dr. Zayas says, so if price goes up in this example, the purple line moves to the blue line faster. Exactly. So the way you can think about price going up is just pretend we slide along this line to the right. So in this case, this is looking at spot price right now, which is 475 right here. This is this vertical line. Let's say we get a 10-point move up. We go from 475 to 485. Now you're here. So whereas today at 475, you're essentially showing no profit. It's showing a small scratch just because the market's closed. But let's just say it would be showing right at zero. So then if you go to 485, you would actually be showing a profit of like 2.25, which is way more than the theta that you got for 1 day passing. So when we think about this, it is super, super important, again, to understand the different profit components, because this being short theta or long theta collecting theta decay is good, but it's completely overwhelmed by a directional move immediately. Jeffrey says, I actually ladder this way on underlying that I'm trying to capture delta moves on the stock I'm holding. Yeah, and that's okay. Again, the downside is you are essentially, if you're good at picking direction, you are going to lose money you're going to make less money than what you can make if you do something like buy calls or something else. And that's why I think it's really important to have a well-rounded trading skill set. Because more often than not, when I see people sell puts, they underperform whatever they're trading against. And it's because you have defined profit. You might be wrong, or you might be right, make a bunch of money because we're right pretty regularly, which is a great feeling, but it doesn't actually matter that much if you don't have the right structure in place. So for me, when I trade stuff, like right now, I've already talked about this position I have in Home Depot. And I'm trading a ratio call diagonal, right? So the whole point of a ratio call diagonal is to favor the upside. And the way I back into whether or not I want to sell premium or buy premium essentially comes down to my hypothesis, what I think the move might be and how I'm building the trade around that move. So that's that. And then I want to make sure I get to off Putin's question, because I originally was going to do something about meme stock trading tonight. And then with the Fed stuff, it completely pivoted the game plan. So I still want to do like a dedicated session about trading meme stock with options. And I have a video that I recorded yesterday that I'm probably going to put out in a couple weeks. So I'll probably wait to do the meme stock trading live stream with options until after that video comes out so people can watch to get some of the base concepts. But I do want to make sure that we take a look at some of it because I don't want to completely bail on you guys. So off Putin, which of those do we want to look at? Do we want to look at OMEX or PLCE? I'm unfamiliar really with both of them. Let's see. Right now, I'm just seeing how the options look in these. So really light options, OMEX, penny stock. This is not for me. Pass on OMEX. Yeah, I don't. Essentially, if it's sub $5, I don't touch it. Generally, that's not a hard and fast rule, but that's a general rule. Like even this, I typically wouldn't bother with, but at least it's above $5. So one of the things that we talked about in one of the previous live streams is the way that meme stocks move. And it's really important to know how meme stocks move. And the reason why it's super important is because it influences the way that we structure trades, right? So what I did is for the video that's going to come out in a couple weeks, I did an analysis of the behavior of, I think I did 5 different meme stocks based on some of the ones that you guys told me. So I think I did GameStop, POS, Siri, Palantir maybe, and then one other one that I can't remember. But I looked at the price behavior of 5 different stocks, and I looked at the frequency that they rose above 10% over a previous day. Then I looked at the frequency for a 15% move. Then I looked at once it crosses that initial threshold, what's the height that it reaches on average. I looked at what's the duration that they remain above those levels. And what I do in this case is I build an understanding of how these meme stocks move, and I create a profile for them. So now I know their typical movement and behavior patterns. This goes all the way back to literally the videos that I talk about in terms of like how to build a strategy. One of the things that we have to do with a strategy is understand what we're trying to trade. So with something like this, it fits a couple pieces of the standard theory, which we'll talk about. But one of the things that I highlight for sure in this instance is there's also just a really good earnings move here. So that's immediately going to confound things a little bit because of the earnings move. And the reason is there's a thing called post-earnings announcement drift that absolutely will impact stuff like this, but it'll be difficult to fully break those two return sources out from one another. So yeah, that's the general thought I have, at least from a movement perspective. We kind of have to keep an eye on it, is the way that I think about it. So then with that, let's take a look at what's going on in here. And Joey says, how far back in time did you look? Yeah, I think I went back over the last 14 years. So yeah, I think it was a 14-year period. And so let's take a look at PLCE. Let's understand what's going on here. The first thing I need to do to even kind of start this process is actually clear off a bunch of stuff from this other window so that I can see. That's the first part. First part is gain vision. Second thing is let's start with looking at PLCE and let's learn about it. I just placed my dinner order, so they probably will be there in a little bit. I also had to double dash so I can get some milk and stuff. And all right. So it's 80% institutional owned, 65% total of insider. Shares outstanding is only 12 million, so this is a really low market cap. Revenue growth is contracting. Short as a percentage of the float right now is over 50%, which is really, really high. So that leads me to look at a couple other things from a short perspective. And now I'm just getting a sense of the background. So I'm looking at how it does for revenue, how it acquires the revenue. Gross profit doesn't look good. So yeah, overall, it doesn't look great. And net income is negative, getting slightly better, but still negative. Okay, so now let's take a look at the short side. And days to cover is really, really high. So right now I see days to cover like over 4 days, which is pretty extreme. And interesting. So then the next thing I want to know is this past earnings. Is what happened here, because this is a really good earnings report, clearly. And that kind of earnings definitely has the ability to kick off post-earnings announcement drift. So let's look at this on a slightly longer term time frame and let's see how it's done with other earnings like this. I'm going to go back further. Because it also looks like it's been starting to base out a little bit. But it hasn't even had this kind of like massively favorable reaction to earnings for a long time, it looks like. So that's also really interesting. My guess is something like this starts to look like the initial floor. Yeah, something like that, like the 14. The fact that it's hanging out up here on such light volume is also really interesting. But I mean, the volume is still like light years heavier than what it was previously. As you can tell, this is something that we had looked at before with that other alert. Let's take a quick look at the options. Definitely big call skew. So lots of people playing this to the call side. Lots of call activity. A lot of people selling calls now and selling puts. So selling premium into it. And then let's take a look across the different series. Front is 29 and 12. Go to the next primary, 9 and 9. Yeah, so most people are playing like this earnings move with these options. So there's 30,000 of that essentially that's going to come off the end of this week. So yeah, I mean, this looks really interesting. It looks like just a massive surge post earnings. And then whether or not this starts to exhibit post earnings announcement drift, I think that becomes the real question. Because if it does, then it'll be much more likely to trend up over the quarter. Typically, that's what post earnings announcement drift would look like for a beat to the upside with that kind of price movement. That's typically what you see. Omnichannel specialty portfolio brands. Second quarter made strategic changes, improved profitability. Yeah, because this looks in general like they're maybe pivoting a little bit. Very interesting. Yeah, I mean, it's nothing that I like. I have no trade in here. It doesn't look bad, depending on what kind of trade you want to run. I literally think you could technically trade it either direction, but this wouldn't be my trade personally. The main reason is, again, like I always look at trades from the context not of could I conceivably put a trade on it here. Like my question is always the same: is this the right place for my money? And when I look at something like this, again, it doesn't look bad, but I also am not sure that I would call this the best place for my money personally. But this looks like the next floor there. So yeah, that's kind of generally what I'm seeing in here. Off Putin says, I bought puts. Yeah, I think that I can totally see playing like some sort of like short-term price mean reversion. I think so. I mean, again, it's really probably not my move, just because we can see that this also tends to cluster when it has these other kind of earnings moves, right? So it did this same thing over here where it had a decent earnings, ran up, and then kind of trended sideways for what? That's like a month, just about a month. So yeah, that wouldn't be my move just yet. Vladimir says, with all the calls expiring in 2 days, the calls expiring don't really matter that much. I wouldn't base the decision on that, like on calls expiring very heavily. Because remember, options are derivatives. They do not drive stock price writ large. They can influence stock price sometimes, but the primary driver of stock price is the stock, not options. Especially for something like this that has such a light options chain. I don't think that this cares at all really about the options. There's just not enough. So as these options come up on expiration, it really doesn't matter. The market makers are already going to be all hedged out here for the in the money options that they're going to have to deliver on. So the stuff that's out of the money is essentially just going to decay away. And I don't see anything here that serves as any sort of like gamma ramp or anything like that. but I totally can see it to the downside. Like, again, like short term running off this high, I think that's reasonable. Again, it wouldn't be my trade because I typically look at stuff like this and I just prefer not to fade the downside because it's already exhibited like really strong strength. The stuff that I take a look at fading are things that are like sick, dying dogs. And a recent one that I talked about was HAL. I'm already out of this trade, but essentially this is an example of where I saw it break below this trend is where I started fading it. It's because I was literally too late to catch it on this one. I missed it here. But I look for stuff that's been like downtrending for extended durations, lower highs, lower lows, can't get a bite, and I'll run those to the downside and just take the sickly things. But stuff that shows, midterm strength like this, there's nothing wrong if you're really good at kind of being a contrarian placement, but it's a really low probabilistic way to trade. It's very difficult to do that well. It's very alluring to all of us because it's kind of naturally wired into our disposition to look for that stuff. But from a trading perspective, I've always found that to be a lower efficacy way to get it done. And that's not just for me and my personal preferences, I don't think. I think it's like a generally well studied process that's difficult. So yeah, overall, nothing wrong with it though. I think it's short term. And the cool part is for something like that, if you do it via long puts, then the risk is defined. So even if this does go on a tear because of some sort of squeeze, because it's so heavily shorted with such a high short interest and days to cover, then I think here you can be, pretty safe. Joey says, how's your futures trade doing? It's good. So the Russell right now is up almost a point. And I think we got in when the Russell was up like 0.8%. So it's not, I'm not going to buy a gold Lamborghini anytime soon, but it looks fine so far. Yeah, I'll probably take a couple looks. I need to adjust a few other things. But yeah, when we got in to the Russell, I think it was up like 0.8%. So we have almost a quarter point out of it. Hey, 0.1%. Yeah. So we're like, we get another half a tenth, then we're at a quarter point. Not a bad run. Hey, 1.01. There it goes. It's on the right path. Day Swag says, I look forward to your paper trading video. I think I use Toss account, but I don't have 100,000 in real life, so I can't picture how to copy, trial, or develop. Never trades with that much money. Yeah, you don't have to use it. And the biggest recommendation I have for people anyways that paper trade is not to use the platform. So the only way that I would use the platform specifically like this to paper trade is, let's say I wanted to trade PLCE back wherever we went because I'm testing something. Let's say I'm testing something that I want to trade this to the downside just because I find this in a bearish scan for whatever reason. And let's say that like this becomes my stop level and I want to know how this strategy works. Well, what I would do is I would go in, I would look at the options. I'd say, okay, maybe I want these 73 days to expiration. I'm going to buy puts so I can trade it to the downside. My approach says I should use at least a 50 delta, slightly in the money, whatever it is. So then I'm going to buy these puts. I don't hit confirm and send. I put this in an Excel sheet. So I copy all of the details from here. I create a trade log that is going to mirror the strategy, in this case, a ratio put diagonal. And then I go in and I type in all the details. I say, okay, today's date is 2 Jan 2024. PLC is trading at 2340. Whatever other pertinent details that I think matter. IV is whatever percent, IV percentiles, whatever percent, if you care about those. Maybe you do, maybe you don't. But then I absolutely just type in all the trade details and I insist for myself on typing them in. I don't automate it. I could automate it. It's not hard. But I think that process of being really, really close to what you're doing is exceedingly valuable. So, but there's a couple different ways to think about paper trading, which that video on Saturday is going to go through it because this isn't where I would start. This is a part of the process that I would use for kind of this paper trading umbrella. But there's a few things I would do before this. So, but the idea is to keep the data because as soon as you put on your trade or do whatever you do, sooner or later you have to, hit reset. And then as soon as I hit reset, it's all gone. Everything that's in there is now gone. So you lose the ability to reference the data, which is a giant mistake I think most people make. There's no reason to make that mistake, I think. You can just track it in Excel. So, all right, gang. Well, super fun session. I really enjoyed kind of more of the philosophical conversations about money, marginal utility, because I think about that stuff a lot for myself. It's not like I have it all figured out. I don't. It's stuff that I noodle on and I try to like reconcile a lot. So enjoy talking about that with you all. I enjoy, as always, looking at the markets. We have the Outlier Pro live stream tomorrow. I'm going to talk about the Russell trade that I made today because it was literally a 6-figure trade in terms of profits. It was a really, really solid day. So I want to talk a little bit about how that went down, and then obviously whatever else we have on the agenda. And then Friday, we have options trading for beginners. I haven't really identified what we want to focus on for that yet. So if there's anything in particular that you want us to talk about, let me know. I'm happy to dive into it. Otherwise, I'll come up with something. But I haven't had anything jump out at me just yet. So that's what we got. Thanks for hanging out. Be an outlier. I'll see you all later.